going on, everyone? Welcome back to Let It Grow Investing. I'm Jeff. Let's roll right into the stock news of the week, right? We got a lot of different things going on under the surface of this market, right? A lot of sell-off this week, a lot of pain, a lot of fear. We're watching the VIX. We're watching a lot of the earnings reports that are coming out, and we're trying to make heads or tails as to what is going on in this market, right? It is very tumultuous. If you're in it, it has been tough, right? I'm still happy with it. I'm still where I want to be. Yes, we came down, but eventually the market's going to come slowing down at some point, right? So we are concerned about a lot of different things going on. Valuations in the government shutdown. We're worried about AI spending. We're worried about a lot of different things that are kind of becoming one big snowball effect of problems that's out there when it comes to the market. So thank you guys for stopping by. Let's get caught up on everything that's going on, and let's try to make heads or tails as to what to do with our money and how to protect our portfolios. So we've seen a lot of the different CapEx spending when it comes to Meta, when it comes to Amazon, Alphabet, when it comes to any of these major players, right? They're all saying a couple of the same things, right? We're looking at higher than expected CapEx going into 2026, right? We're looking at them spending more money to build out AI, to build out the data centers, to build out everything that they need in order to get that number one spot, or at least the top five when it comes to AI spend, right? They all want to be there. That is the fourth industrial revolution that a lot of people kind of keep pointing fingers at as to who's going to win this race. So I look at a lot of these names. We've talked about them a lot here. We're looking at which ones are going to win. Is it going to be one name that wins it, or is it going to be a handful of names that really win the AI arms race? And I've been talking about this for a while. We've been looking at names, like I just said, the Mag 7, Palantir. We're looking at all these names and who's going to win. And those names right now have not really been winning, at least this week, right? And you zoom out long term, all of these names are doing fantastic, right? You're looking at Nvidia being up 45% of the year. You're looking at Palantir being at mid 20s like last summer. It was insane, and now we're at 180, and people are getting all worried about it, right? You got Michael Burry from The Big Short shorting Palantir and Nvidia. That is a lot of his portfolio. So there's a lot of valuation concerns. Then you got someone like Michael Burry coming out and saying, hey, I'm shorting these companies. I'm betting that they're going lower, or writing put options on these companies. I forget the positions, but it's a bet that it's going lower, right? So a lot of different things are scaring the market, right? I can take a look at the VIX, and we're going to take a look at this one real quick, right? So the VIX is basically your volatility and fear index when it comes to the stock market. So I'm going to pull up E-Trade here. We're going to look right at the VIX. We're going to share this one, and we're sitting at a 19.08, right? And then if I go over to Google, right? I had this pulled up. I'm going to go back to the CNN Fear and Greed Index. We'll share this one. Now we are looking at, it's at a 21, but needless to say, either way, 19 or 21 is saying extreme fear, right? So we're looking, this is a little bit easier to see. Extreme fear was at a 23, and there's a lot of reasons that investors are getting scared, right? And this really means more or less the change in volatility that's anticipated within the next 30 days. So I can take a look further down. Now we're looking at stock price strength. We're really looking at a lot of options that are written on the VIX, right? We're looking at that. So we've got another page I was just reading, broke this down a little bit easier, but this was a better chart. So I pulled this one up for you guys. Gauging the mood of the market, right? Many investors are emotional and reactionary, and fear and greed sentiment indicators can alert investors to their own emotions and biases that can influence their decisions. That is part of what I wanted to show you. And then the other one was the actual applied or implied volatility from the current price points here. So let me get back over to that. We've got a lot of buy signals though, right? So we're looking at a lot of fear, and when there's fear in the streets, we generally think buying, right? That tends to be a kind of normal reaction to fear in the streets, right? That is what we are seeing there. And I'm going to check one more thing that I already clicked on to see if I can get back to the current. This is actually the one, right? So we're looking at The VIX is currently at 16.73. Not exactly what the other two reports said. Close enough, though. Approximately 14% or around zero point 0.3 standard deviations below its historical average of 19.4. Stock market sentiment is neutral, is what this is saying. But what is this, right? So we're looking at basically what this is, standard deviations, and then how this really affects the market. Financial theory that drives options pricing, right? So the difference in options pricing and how our money is going to be affected by it. So we're looking is it boils down to using the available price information from 23 to 37 days out of the money SPX options, we can calculate expected volatility. The result is one standard deviation range of expected volatility over the next 30 days, expressed as an annualized percentage. So if the VIX is at a 50, that means the S&P 500 or the SPX options prices imply that the market expects the S&P to move either up or down 50% on an annualized basis over the next 30 days. And then you'd have to take that and divide it by 12, right? So we got less volatility, but there is extreme fear that is out there, right? So we're looking at a 16.73. Next 30 days, investors are expecting U.S. stock market to either go up or down by 1.3% or 16.73% on an annualized basis. VIX is a measure of one standard deviation. You could rephrase this to say that in an aggregate, investors are 68% sure in the next 30 days that the market will be within that plus or minus 1.3%, and 98% sure that it'll be plus or minus percent. But yeah, we are in that extreme fear. People are fearful of the government shutdown. People are fearful of overvaluating or higher valuations than we are really expecting these companies to stay at over time. Right? So then if we're looking at something like Palantir, and this one had just reported, and we're looking at something that has now down to 180. We were up to 207 on the 3rd. So we gave back around 10%. Yeah, there's definitely some fear out there. And Michael Burry puts are definitely part of this, right? So when you're looking at what Palantir is actually doing, right? Palantir's shares dropped despite stronger than expected third quarter earnings. Wall Street raised valuation concerns, and Michael Burry revealed a short position. Alex Karp, the CEO, ripped into short sellers, calling their positions market manipulation in an interview with CNBC's Squawk Box. So Karp is basically saying that people like Michael Burry are trying to bring down the stock price. That's going to happen. We've seen it plenty of times before. Could it be market manipulation? Possibly. Are they going to be brought to charges on this? I don't think so. We've seen it happen before. Is it shades of gray as to whether or not this is in good standing or good faith? I think it probably is, right? But we have no real way to say like what his basis is. If he is just trying to spook the market and make this big hype campaign that Palantir is going to nothing because it's sitting at a 400 times multiple on PE. Yeah, I mean, that definitely doesn't look great. And it kind of furthers his, put position that it's trading at a 400 times multiple. It can't keep going like this. It's up thousands of percent in no time. Yeah, there's some concerns there as far as some of these investors are concerned. So do we think that these stocks are going to slow down? Well, there's a lot of different things right there, right? If you're looking at this thing, you're thinking the government isn't spending. The government is a huge buyer of Palantir product and databases and AI. So if they're not spending, well, what's going to happen to Palantir? Are they going to have a terrible report next quarter? Potentially, right? We don't know how quick this is going to turn around. We don't know how fast people are going to start buying more Palantir product when the government reopens, or if they're going to, right? We don't know what's going to happen. So there is a lot of fear baked into a lot of these stocks right now. But a lot of other things are pointing to the fact that the AI spend is so strong that we're going to have, say Meta buying NVIDIA chips or all the partnerships with OpenAI, with NVIDIA, with AMD. We're seeing all these things happen in real time. That makes us think, well, yeah, I mean, there's a lot of fear. Is that a good time to buy, right? history tends to repeat itself. So normally speaking, it would be. And is it an emotional thing to go out and just sell these stocks that are great companies? I bought a little bit of Palantir on the dip. Nothing crazy. This is a couple shares for me, but a couple things that I have been buying, or one that I've really been buying, is Meta. I don't foresee the Meta CapEx being a major problem. We've seen this before too, guys, and history does repeat itself. So when I see a company like Meta, yes, I have a call position on this thing where I think thought it was going to get above 675 after that initial drop after earnings, and saying that we're having higher than expected CapEx for next year. I thought it was going to bounce back quicker, right? We're looking at a stock that, if I look at the 1 month, we saw this thing at 750, and it originally dropped down right after earnings around mid sixes, 665, and then it just kind of precipitously kept on dropping, right? We saw this thing get down to like the lower 600s. And I've been buying, right? I mean, you can probably see it here, my position and how much I've got there and how much I've lost on this 675 call, around $1,800 down. I put in around $2,200 to buy this option, and it's only worth $320 right now, and it's going to expire on the 21st. So am I saying that this is what you should do? No, I'm not saying go out and buy this call option. Did I do it? Yes. Is it going to work out? Probably not. But when I look at this thing long term, and I know where this thing is going, we've got more monetization from WhatsApp and Threads. I think the spend is going to just continue when it comes to people advertising on Meta. I don't think that the AI spend is my biggest concern when it comes to them. The metaverse spend that they tried to force last time, it didn't really work. But then the board pulled it back, right? The board said, hey, this is not working. This isn't going to work. We're going down the wrong path. Investors don't like it. We don't know if this is the way to make money, but AI looks a lot more promising when it comes to the spend. So I have been buying this thing. I think I bought this stock Meta about 4 times this week. I'll probably keep on adding. That is my 2 cents here, right? I could run through the valuations. You can kind of do your own homework on a DCA and get to a price point where you feel really, really comfortable buying this thing. I'm not even going to say it's going to go to 843. Not this year. I don't know, right? I had originally said maybe 700 or 800 by the end of the year. Well, hey, we got the mid sevens and now we've fallen back down, right? So I don't want to sound like a broken clock that, it's right twice a day or whatever. But I do believe in this stock long term, right? I think Zuckerberg has proved that he is capable of running a company this size. And if he kind of gets off the rails, the board is going to kind of navigate him back into where they are making money. Stick to what they're good at. Don't go too far out into the left field and go down this metaverse path and just simply ignore other things, which I don't even know that he was doing. But they did have that CapEx spend go up for being in the metaverse, and then they backpedaled, right? So we saw this thing get down to the 400 level earlier this year. We saw Meta be $80 during COVID. I think that there's a real strong point to buy this stock. And if it gets to the fives, mid fives, upper fives, I'm going to be loading the boat on this thing. And that's where I'm at. I don't see this thing slowing down. I think a lot of other, analysts are there with me, right? We're seeing buy targets, and some people don't even want to put a price on it because there's so much volatility. We're looking at 955 price targets, 770, 880. I mean, that's a pretty wide spread, right? I mean, you're almost $200 apart on these 2 buy ratings. And this is both supposed to be within the next 12 months. Do I think it can get back into the 8s? Yeah, I do. I don't think it's going to be by the end of this year, but I think maybe as we go forward, we're going to see what happens, right? So we're looking at 815, 820 price target, 808, 685 with a hold from Scotiabank, and then an 850 from Seaport. So a lot of people saying this is going to get to the mid 8s. These are recent price targets. These are from the 30th of October, and we're looking around 36% of upside, right? So what did I do, and how am I buying, or where am I getting the money from these Meta shares? Well, I tried to sell 5 shares of Lilly, but I had some connectivity issues. So I actually did 2 orders of selling 5 shares of Eli Lilly. So instead of selling about $5,000, I sold about $10,000. I don't think that Lilly has the upside that it had previously, right? In the mid sixes, I said this thing is a screaming buy. And I will stick with that, right? I will stick with that. So I still have a large position here. I'm not, again, trying to really hide anything. I will even show what I still have left. I don't really mind. If that helps someone, great. So I still have around $40,000 worth of Lilly stock. Made around $9,500 or $9,400 on this one. Yes, it went down on Friday, right? I see that, but I also took some off the table. I'm going to leave that rest in there. I still think that this is a solid stock, but I don't necessarily want to think that this is just going to keep going up, because when we bought it at 650 or 700, I had that price target already in my mind that if it got up that 30-40% that we were looking at that given point in time, that I was going to sell some. So I did that. And now I've deployed that money elsewhere where there's, I think, more opportunity. I don't think that there's 30 or 40% left to go in Eli Lilly in the next 12 to 18 months. So you sell a little bit, you take some of that profit and you redeploy some capital. So that is what I did. And that's not to say that I'm not long in Eli Lilly. I am. I'm also long in Meta. I'm also long in Amazon, right? I'm still bullish on Amazon. I think that this one is in a similar pattern to where we saw Alphabet earlier this year, right? So I have a good chunk of money in Amazon as well. So when it comes to Amazon, yes, there's around $46,000 sitting here of Amazon stock. And I think that this is my cost basis at $30,600. So I'm up $16,000 on Amazon. So really not all that much when it comes to percentage basis, right? I mean, it's probably a 50-ish percent gain, but I've been in this one for a long while. So when I look at this thing, I'm thinking, where can this go? Why is there so much fear around it? And why hasn't this thing really broken out the way that an NVIDIA has, or even an Alphabet, or some of these other names that we look at, right? And I understand that NVIDIA and Amazon are not the same company. I understand that NVIDIA is wholeheartedly in on AI, hardware, and everything else that is, just unicorns and rainbows right now, if you will. And Amazon's got a lot of other businesses, right? So they're not going to be this just pure play on AI that NVIDIA is. But I do think that they are more relatable to a Google, right? So when I'm looking at Amazon saying that, hey, we still have around 21% of upside, I really do believe that this is a fairly valued company. When I'm looking at trailing 12 months PE, it's at a 34, which is probably a bit high. Let's take a look just for giggles here. Let's take a look at what Amazon looks like when it's going forward, and it's at a 33, right? We're looking at a forward PE of a 33. It's in a buy rating, but yeah, it's got 46.8% of return over 5 years. So roughly where I'm at on this thing, and only 17% over the past year. I say only, I'd be very happy with 17% across the board. That's fantastic. But when you're looking at other stocks like Palantir and NVIDIA and AMD and Google that are up 100% plus, it's hard to get excited about Amazon being at 17, right? Because this is a bigger position for me. It's probably a top 10 position for me. When I see it only up 17%, I'm like, man, I could have put that money in any of these other number of stocks and had, triple digit returns versus 17%. So is 17% terrible? No, it's not. But could it be better? Yeah. Could it be worse? Certainly. So we're looking at about 18% upside here. We're looking at, this growth, this earnings continuing to run up, right? We were at 553 on an annual basis for 24. We're looking at an average of $7.13 by the end of 25, and then going up to around $8 by the end of 26. On that high price point, maybe we get up to around $10.70, right? So that's what we're seeing there. We got a lot of positive earnings. We've got strong buys and buy ratings on this thing from 73 different analysts. We've got nice returns on annual revenue, 12% by the end of 25, and throw in another 12% by the end of 26, right? This is not a small company, right? That is a lot of increase over a 12-month period for a company the size of Amazon, right? We've got Some other key metrics that we love to look at down here. We are at a 41% discount on forward PE. That is massive, right? So we're at a 33. That's probably seems a little bit pricey, but then we look at what that 5-year average is on Amazon, and we're thinking, man, this is really at a discount. And then we're going down here, looking at a forward peg at a 1.9, 5-year average being a 1.8. Doesn't really give us, great insight as to that it's such a spectacular buy. The growth is fair for the price that we're paying. It's right in line with where it's been, but the forward PE is trading at a discount. So as they continue to invest in AI and spend more in CapEx, I do believe that that is going to start turning into some more growth, but right now it is not, right? The only other industry that is going to have so much spend on CapEx is going to be oil. And oil, when they start spending it and they are building out more capacity, they are making that money within the next 12 months. And when it comes to AI, we don't really know how long that spend is going to take to generate more revenue. So that is another reason of a lot of the fear that is in the market. We don't know how long this spending on AI is going to take in order to build up that revenue that we want to see, right? We want to see more than 12% a year. Amazon's there now, but can they get to 20? Can they get to 25? That is a lot of the thing right now that we just don't know as to how much return we're going to get off of this added AI CapEx expenditure. Which I basically said expenditure twice. Nonetheless, that is what we are concerned about. We don't know how quick that turnaround is going to be. We don't know what the government's going to do. So there's a lot of fear out there. That being said, some of these large companies are going to be fairly valued. They really are. Now, when I look at other names, are the Nvidias of the world. I'm reading some different things that say, hey, this thing could potentially stall out towards the end of the month. Is a 53 times multiple on Nvidia a fair valuation? And when it comes to Nvidia, let's pull up the Refinitiv report here and we'll share this one. We're looking at a forward PE of a 32. We've got buy ratings. We've also got 1,200% of a 5-year return, but only 29% right here. So yeah, maybe over the past year, it's been higher. Sorry, I probably got my numbers wrong. But from the start of the year, it's not quite where I thought it might have been. It feels like it is, but it's probably a little bit further back than where it's been right now. So broker upgrades, 22% of upside. Let's take a look at what the earnings are doing from 299 in 25 to 451 in 26 and then 660 in 2027, right? But we are talking about a big slowdown when it comes to 2028 or 29. We don't know what the CapEx of all these large companies is going to be. We don't know how much money they're going to be spending on NVIDIA chips, right? So we've got huge annual revenue growth from 26 and 27, probably around 58-ish% for both years. That is massive, right? We're still getting revenue coming in. Dividend growth, yeah, still no dividend yield, but they did pay out 81% more. We've got a 19% discount on forward PE here. We've got trailing PE at 53, cheaper than their 5-year average, but still very expensive. Forward peg is at a 1.0 compared to a 1.3 average over the past 5 years. So it is trading cheaper. The forward PE is at a discount. There is a lot of valuation concerns across the market that are going to bring NVIDIA down, especially after they've had this monumental run of 1,200% over the past 5 years. Now, can AMD run with some growth if NVIDIA does stall out? I believe that they can. Yes, we have a higher PE here, but we also have a company that is playing catch up when it comes to AI, right? The MI 400 and 450 chips are going to be massive, right? So you're looking at a company at what's the market cap here? $415 billion valuation versus NVIDIA's at almost $5 trillion, right? So you're looking at a company that's about a tenth of the size, and they are going to be more nimble when they announce these new products. It's going to lead to a lot more growth, right? They are trying to shrink that gap between AMD and NVIDIA. So we've got more upgrades here. We've got about 10% of upside, even after this monumental run that they've been on since $80 earlier this year. We have pretty awesome growth for earnings when it comes to the next 2 years, going from 394 in 25 to 641 in 2026. That is a massive return, and almost double from where we were in 2024. Oh, big, huge gains for AMD when it comes to earnings, right? So that is a lot of the reason that this thing has been taken off. Revenue, 31% and 70%, call it, by the end of 2026. So not as strong as NVIDIA's, but I still believe that this one has a long, long way to go, and they are at the beginning innings of their adoption of people buying these MI 400 and 450 series chips. We've got trading at a premium when it comes to forward PE, 47 times. Now they are growing. I do expect things to start picking up for them, but on paper here, it's really a tight toss-up as to which one do you want to buy. Forward peg is at a 1.2. NVIDIA's was at a 1, and their 5-year average is a 1.3. So very close there as well. On a forward PE basis, it looks like NVIDIA might be the better buy, although I do believe that things are going to change a bit here. And I think that AMD's probably got more growth, right? So I have been buying AMD. I have not bought any NVIDIA. I've bought Meta. I've bought Amazon. I sold some Eli Lilly. I think that a lot of this fear out there is going to blow over. I think we've had a lot of reports that have been really strong. We saw Meta's be very strong. We've seen Palantir's be a strong report, and they both traded down, right? And I think a lot of people are taking some profits coming into the end of the year. I think that we're a lot of fearful around what the government's going to do and what is going to happen as to when this all kind of gets resolved, what happens going forward. And what do we do in the meantime, right? Do we want to take some out? Are some of these government workers or people that, maybe they have some money tied up in a brokerage account or whatever, are they selling off to kind of ease some of the pain of not having a paycheck, not having some of the government assistance? I'm not too sure as to what those numbers are. And then we're going to see what actually happens when the government reopens. How much are they going to be able to spend? What kind of funds are going to be allocated to AI or any other spending when it comes to government reopening? So a lot of different fears out there. Hopefully some of that has eased a bit of your actual emotions when it comes to investing, right? That is a big part of the investing side of things, is the psychology, right? I'm going to kind of weave in some sports talk here as we finished our league season for soccer, and we finished with a win, right? But I had a couple kids come off the field being upset about a win because it didn't go exactly how they wanted it to go. They maybe didn't score that game-winning goal. They didn't get that assist or that big save that they were looking for. So it didn't feel as good to them, right? And I think that is a lot as to where we're at in the market right now. Is things don't look great for everyone. It looks good for a lot of these bigger companies, but there are those smaller players that haven't had that same success, right? We haven't seen a lot of those small caps really break out in the way that we maybe thought they were going to. So just because one won, two different ones, English is confusing. I do think that overall the market is fearful about a lot of the unknowns right now. We get away from some of these unknowns. Government opens back up. People continue spending money on AI. Michael Burry puts, those news headlines kind of get put to bed. We move away from some of that. We start seeing this VIX, kind of ease some tensions of being extreme fear. Couple people put their money back to work. I think that we're going to see a turnaround in the market. Now, I've heard a lot of talk as to where the S&P is going. Can it go to 7,000 by the end of the year? And we're at 6728. Can it go to 7,500? I mean, maybe. I don't know. Again, the crystal ball, the whole thing, it's not working at the moment. So we've got that to contend with. But I do believe that we could have a resurgence if and when the political game kind of gets figured out. Government gets back open. We've got more spending. We got more people with money in their pocket that actually want to buy things. They're not fearful of, not having a job, not having a paycheck. Is our positions going to be kept open when the government does open back up? There's a lot of different fears. So that is my take on that this week. I will be buying Meta stock for the investing challenge. I am trying to build that position right now while it's cheap. Think of it being AMD, earlier this year at 80. I'll share this one, right? We're going to go ahead and pull up AMD real quick. Think of buying Meta right now, similar to what we did when AMD was down here in April in the 80s. And now, hey, yeah, we're at 235. Think of it as buying Eli Lilly when Eli Lilly was down in the 6.25 range, right? Or the 700 range. And now it's at 923. That is where I'm at with Meta right now. These three that I just mentioned, AMD, Eli Lilly, and Meta, they're not small stocks. This is not just some pie in the sky valuation on some small cap that I might have seen in a headline somewhere. These are big names. And when you can buy Meta at a 21 times PE with 38% of upside, I think it's probably a no-brainer. That is completely up for you to do with your portfolio, but that is what I'm doing. This is going to be the stock that I'm rolling into heavy right now. Maybe it works for you. Maybe it doesn't. Do your own homework, do your own due diligence, make your own decisions, right? But for me, I'm going to be backing the truck up. I'm going to be loading up and increasing that share count is what I want to do right now. That is how I'm going to play it. We've had a lot of fear out there. People are taking money out of Bitcoin too. Bitcoin is down to around 104. I think it went back above 4,000. Let's see a spot price on gold and see just what's going on when it comes to the ounce price here. Gold spot price, and let's go ahead on APMEX. Let's take a look here. We'll share. Let's see this one. So we've got gold price. Yeah, we are at 4,016. So it's still really, really high. A lot of people flocking to gold for security, right? We've seen it happen before. If we look at the 1 month, where are we at? We came down from like 4,300. But yeah, still very strong when it comes to gold. And if we look at the 1 year, we will see that gold was down near 2,500 this time last year. Solid increase there as well. People pulling some money out of Bitcoin, maybe rolling into gold with the uncertainty that is the world market. So that's what I've got for you guys. Is it safe price to buy some Bitcoin? I might let it go a little bit lower. If you want a dollar cost average into it, probably not a terrible idea. Gold is at a peak. I mean, off the 4,300 high, but it's definitely at some pretty high levels here, being above $4,000 an ounce. So that's what I got for you guys. I'm buying Meta. That is my play. That's how I'm looking at this market. Definitely other stocks that make sense. Look at the valuations, see where they're going. Look at those PEs. Look at the price earnings growth multiple or the PEG ratio. See what makes sense for you. Stay smart out there. Stay sharp. Stay invested. And don't let the emotions and that VIX, don't let that ultimate fear index get the best of you in making poor decisions with your money. Thank you very much for stopping by. I will catch you guys in the next one. Take care.